Your annual bonus just hit your bank account. Congratulations! Don't spend it all in one place. You want to make the best use of it. But does that mean you spend it, save it, invest it, or something else? Hi, my name is Michelle, and I'm a financial advisor here at Financial Design Studio, where we help build tax-efficient retirement plans for retiring professionals. Today, I'll break down the smartest ways professionals can put their bonus to work and the common mistakes to avoid. Before you can start planning, you need to know what you are getting. Bonuses come in a couple of different forms. You can get them in cash, or you may just receive additional company stock. In addition to knowing what type of bonus you're going to receive, cash or employer stock, it's also important to know when and how you're going to receive this. Is this on a recurring basis, monthly? Is it as you earn it, for an example, like commissions? Or is it a one-time a year, a lump sum that you've earned from the previous year and now it's paid out? So it's really important to know those pieces. So one of the biggest things that we think about when we're receiving our bonus is really the taxes that are being withheld from this bonus amount. This is something we want to make sure this is taken care of, because the rest of the amount is something that we can do something with. So now we need to know at least what are the taxes that we owe. So when we think about this, it's very common that your employer already has a standard amount that they're going to withhold from this amount you get. So let's just assume that you receive $50,000 in a bonus and your employer says automatically we're going to withhold 20% for federal income taxes on this amount you're receiving. Now, one of the things you have to think through is 20% good for you, or are you in a different tax bracket? So let's just say you have really high income already from your salary and this bonus is just adding to it. Let's say that you fall into the 24% tax bracket on this income. Well, we can quickly see that what's being withheld on this amount, that 20%, and the 24% that we're going to owe on it is going to fall short. So it's really important that this 4% is going to get paid in somehow, or that you're at least aware of it so you can do something about it. Now, the difference of this, that 4% that we're talking about, what's really happening is that the government says, we want you to pay in taxes as you earn it. And so as you go throughout the year and you have your paycheck, your employer's already withholding that income tax for you. But now when you earn this bonus, they're maybe doing the same thing. However, it's not withholding enough. So now you need to take care of this additional amount. The reason that you need to take care of that is because this 4% difference could cost you in underpayment penalties, which means that at the end of the year, when you do your tax return and you add up all of your income, if you owe more than you've withheld from your paycheck, then the government will say you should have paid in more all along the way as you were earning it. And so we're going to actually charge you an underpayment penalty because you didn't. So this is why it's really important to know the taxes you're going to owe. Now, it can take a little bit. Perhaps you're earning this bonus early in the year. Even these funds that you're receiving, so this has been deposited into your bank account, be sure that that money is doing something even when you don't know what to do with it. Okay, now that we've figured out how much we need to withhold for taxes from this bonus you're receiving, now really kind of comes the fun part. And this is figuring out what we're going to do with this money. And when we think about what we're going to do with this money, we're really talking about what are the goals that we have. Now, I know that can sound really big and undefined. So let's talk through that so it actually makes sense for you and you can think about how this looks for your plan. So when we talk about our goals, the way that we set them is by saying, here's how much we want to save for retirement, or here's what we want to fund. Maybe that's college education or some project. So we have all of those kind of defined that that's what we want to do. And then as we build your plan, we break that into now each year or each month what you need to be doing to accomplish those goals along the way. So each month you're contributing to, let's say, your 401k. You're adding a little bit of money each month so that by the end of the year, you've maxed out your contribution. Also, every month you're paying down debt and you're doing these other things that are just automatic. And they're also helping your financial plan. They're helping you to get where you want to go, these goals that you've said you want to achieve, whether it's paying off your mortgage, saving for retirement. So you're already doing those pieces. So now all of a sudden, when we receive this one bonus amount in 1 month of the year, for example, it could throw everything off because you could see that additional amount in your bank account or in your investment account. If it's company stock, you could just see this land there. And you could say, wait a second, I don't know what I'm supposed to do with that. I know what I'm doing monthly. Okay, that's defined and it's happening. But now I just have this large amount. What do I do with this? But there's so many things you could do with it, right? That's fun. And so let me help you think about some ways to consider this. So, for example, in addition to thinking about retirement, things like that, a lot of times our clients will also say, you know what, we want to pay for our child's college education. So we want to fund a 529 account. So we're setting that money aside. And instead of having that happen on a monthly basis, a bonus might be a great way to fund that. So, for example, in our example, we had $50,000 we were receiving in this bonus. And so then we had taxes withheld from it. And maybe if you live here in Illinois, you say we want to put the max amount we can into that and still get the state subtraction. So we're going to put 20,000 into those 529 accounts for that. And so you can see how we're slowly giving our bonus jobs or places to go. A 529 could be that, but you could also say maybe, and in some years it can be different. So you could say maybe we needed to buy a new car. It was just time we needed to replace that. Maybe you had a remodeling project at home that you've said when we get a bonus, we want to fund it with that. Maybe because of what you've received, and maybe you received a little bit more than you thought you would, you actually could give a little bit more. So maybe you want to do some giving from that amount too. So really what we're doing is we're coordinating the other pieces of income or benefits that you're receiving, and we're saying this is the best plan to use these in the most tax efficient way. What's really important in this is that you're considering what percentage of this is going to go to fund goals that we have, whether that's long-term or short-term, and what percentage of this kind of allows me to celebrate the reward of your hard work. So now let's touch on some common traps that people fall into when they receive their bonus. First is something called lifestyle creep. And what this means is that people start spending more with this bonus they've received. And what happens is you actually end up spending more than what you received in that bonus amount or had left in the bonus amount. You're really increasing your whole cost of living, just your basic underlying expenses. And that is something that we really want to watch out for. Secondly, is that we underestimate taxes. We already talked about this, but really knowing about what you're going to owe, because if you don't, there could be penalties based on the amount that you didn't pay in. So it's very important, again, to have a plan for those taxes and know what you owe. The next one is not using money to advance your bigger goals. And so, like we talked about, having a percentage that you're saying, this is what's going to fund those goals that we have for the future. A bonus is a great way for those to actually start to be funded. So again, then it's not coming from your monthly income, your monthly salary, but it's actually from this one-time amount. You're setting it aside to cover those goals that you have. So you know you're funding them. What you really need to understand is that a bonus can disappear quickly, or it can meaningfully change your financial future. Really, the difference is in the planning. You have a plan, you put the funds where they need to go instead of making other choices that don't necessarily get you where you want to go. And finally, bonuses don't always get paid in cash. And this is really important to know and consider, because if yours isn't paid in cash, now there's an extra step of something you need to do. You might need to sell that stock to be able to fund those goals, or maybe you just simply need to move those shares of stock to those other goals rather than selling it if there's any tax consequences of that. So it's really important to know what you need to do. If you are someone who's starting to think about retirement and you have questions that internet searches just can't answer, we'd love to help you. Click Get Started on our website to schedule a free consultation with our team to discuss your retirement needs. And thank you for watching.